Hi, everyone. It's Christine Kopr with Sotheby's Realty. Thanks so much for joining in today. It's our January market update, looking back at how 2022 closed out and our December numbers. Today, we're going to do a deep dive into December sales, how they compare to the last 6 years. We're going to look at the total annual sales and how they compare to the last 6 years, as well as our regular monthly overview. And we're also going to take a sneak peek at how two separate markets, Vancouver West versus Vancouver East, and how they compare to the Metro Vancouver stats. So let's get to it. Okay, so here we are taking a look at the sales for all of 2022 for the Real Estate Board of Greater Vancouver. Now, December sales closed out at 1,295 sales. And we're going to take a look at how that compares to the last 6 months, but also just wanted to give you an idea of what this year looked like in the real estate market in terms of sales. This is the amount of volume and transactions that are happening in the marketplace right now. As you can see, earlier in the year, we started off with a bang, peaking out at 4,300 sales. This was an amazing month, and it was an amazing market to be in earlier on in the year. It was extremely busy. Where multiple offers and subject-free offers were prevalent. And as you know, what started to change is we started to see the interest rates increase. And we're going to have a look at that graph too and see how they're pretty much inverse. Now, you can see we started out with a bang, and then it was pretty much downhill from there. So how did December do comparatively to the last 6 years? Well, our December sales here in 2022, 1,295, less than half of what we clocked out in 2021 and nowhere near what occurred in December of 2020. That was also a very busy month and a very unique December. Going back to 2019 and 2018, we did a bit more than what we saw in 2018. And my gut feeling is we're going to see a lot more activity similar to the 2018-2019 market moving forward. Why is this happening? As we discussed, well, rate changes. If you can remember and just picture this in your mind, interest rates were down to 0.25%, the prime rate. And that was basically free money. You were able to get a mortgage at a point in time that was severely less than inflation. But we've had a 4% increase over this year, and that is obviously going to impact a real estate market. And not only that, it's been very rapid, and it's also been over the course of the year rather than one large 4% increase shot in the arm to just shock a marketplace. It's been gradual. However, it's been very consistent moving forward. Now, one thing to keep note is at the end of December, the Bank of Canada did somewhat indicate they started to change their tune. They could see some inflation coming down in interest rate sensitive areas and that they might be tapering it off. However, we did have a very strong jobs report come out at the end of December. And of course, part of this slowing down of the economy and inflation is about killing jobs, unfortunately. So we haven't seen that yet. And the consensus out there is we're going to probably see another rate hike January 25th when the Bank of Canada meets again. Now, we probably could actually see maybe even 1 or 2 more rate increases. And then probably my assumption is they're going to taper it out. They might not even increase rates at the end of the month, but the strong chances is that they will. Now, from here, what we're hoping is we're going to get some stability and a panning out of interest rates, and it's going to give the time for the market to really acclimatize to these new rates and this new reality of what's happening in the market. From here, my predictions about when are we going to see lower rates, my guess would be probably not until 2024. What the Bank of Canada needs to see is inflation really coming down. Their target is 2%. I'm not sure they're going to get there that quickly, or if they're ever going to get there again for that matter. But I think it's going to take some pain in the economy before they really start lowering rates. And another year or so is probably what it's going to take to really get these new rates into the economy and impacting it. It usually takes 12 to 18 months. So those are my predictions. Eventually, though, of course, rates will probably, at least that's my bet, come down to more normalized levels around the 3 to 5% range in terms of in the market space, not prime rate. So let's take a look how this has impacted sales. Our overall sales for the entire year of 2022 came in at just under 29,000 sales. Obviously very low compared to 2021, which was the rock star year, but also you can't compare to the peak of the market of all time. This wasn't just a peak last year, but it was a peak for our market ever. So remember, that's not a normal market. And we want to take a look at sales compared to more of like a 10-year average. And this gives you a comparison over the last 6 years. We're getting a lot closer to what we did in 2020. However, my prediction is we're probably going to see sales, as I mentioned before, in and around this 2018, 2019 levels moving forward. So a lot less transactions happening. I feel like we're going to have this standoff between buyers and sellers, where buyers want to be in terms of prices and their psychology around the market, as well as their affordability, because when you're going for a mortgage today, rates are so high, you get a lot less mortgage financing. And then, of course, the sellers who may or may not need to sell are not super motivated to be selling in these markets. Then you might get those sellers that do need to sell, and then coming to a point where the buyer and the seller can come to a price that works for both parties. Every month, I really like to go through all of these stats and put them into perspective for you, just to give you a real perspective of what's going on today, and then also put it into perspective of the last 6 years. So as we discussed, December came in at 1,295 sales. It's almost a 20% decrease from November, and it's a 52% decrease from last December's volume of sales. And to give you an idea, it's 38% below the 10-year average. I love to focus on that 10-year average because it gives you an idea. It takes out the really high peaks and the really low lows and tells you what we should expect in a normal market, which of course there never is one. It's either high or it's low, and it's to the extreme. A balanced market lasts for about that fast, but it gives you an idea of where we're at in the speed of things. So 38% below the 10-year average. And I think sales moving forward are probably going to be lower, but we're probably going to see some changes when it comes to the benchmark price coming up in the months ahead. New listings. New listings are really important because this is the new inventory that's coming on every month. And surprisingly, in the month of December, we sold more homes than we had come on the market, which then lowered our total available inventory, the amount of homes that are on the market and available for purchase at this time. Listings that came on in December were 61% below the amount of homes that came on the market in the month of November, so the month before. And they're also 38% below year over year. So not a lot of listings coming on the market. And that's the story that continues on here in terms of our total active listings on our MLS. And again, our real estate board of Greater Vancouver goes from Whistler all the way out to Maple Ridge. We have a total of 7,384 homes available for purchase today. That's 20% below a month over month. It is a 41% increase year over year. However, last December, we had about 5,000 homes on the market, but remember, there's generally a lower amount of homes on the market in December, but it is a larger increase from last December. Months of inventory is a great way to predict where prices are heading. So 4 months and below of inventory is considered a seller's market, just not enough inventory for the amount of demand that's occurring at that time. And 6 months and above of inventory is indicative of a buyer's market. 1 month does not make a market. However, if you have a consistency or a trend, it starts to tell you which way prices are going to go. And you can see that December came in at 5.7 months of inventory, which is the same as we saw in November, but it is also a 200% increase in terms of months of inventory from last December. Now, last December, we only had 1.5 months of inventory. There was no inventory for the amount of people that wanted to buy homes at that time, and sales were much, much higher. Remember, they were 52% higher than they are right now. There were not enough homes with respect to the amount of homes on the market at that time. So even though we had lower inventory, demand was so high, it was very, very strong seller's market. But now, when we take a look at the trend in terms of our sales, you can see through the year, they have, outside of October, have steadily somewhat been tapering off, and we have lower demand. And I think that we're probably going to be sitting in these types of ranges moving forward. The big key that we want to look out for in the spring is total inventory. How many new listings are going to come on in the spring? I talk to people all the time who think about listing in the spring when everybody else is going to list. And that's generally because properties are looking better, the weather's better, more people are out there and focus on purchasing property and making that change before the summer. It's one of the things that we need to look at moving forward. However, I'm very impressed. I thought there was a strong chance we were going to see a lot more inventory hitting the market earlier this year. It hasn't happened. And with the low amount of sales, while we have had price depreciation, it's really been a steady, somewhat downward pressure on pricing. Now, if we get a big amount of inventory coming on the market in the spring and the sales remain low, that is where we're going to see a lot more negative pressure on pricing. So that's one of the things that we do want to look out for. Having said that, I feel like activity is probably going to pick up a little bit, but it is the thing that we want to watch. Benchmark price. So the benchmark price came in at 1.114 in the month of December. That's 1.5% lower than the month before, and it's 9.4% decrease year over year. In December of 2021, the benchmark price was 1.230, and now we're down to 1.14. The benchmark price about a year ago is what it was in about May. However, when we take a look at the benchmark price in the last 6 months, it's about the same as a year ago, but from the peak, which actually was in April, we're down 18.9%. It's a big downward pressure on the benchmark since the peak, but if you were in the market previous, it's not as much of an impact on pricing. So let's take a look at the benchmark price over the last 6 years, looking back at 2017 to 2022. Benchmark price ended off in 2022, an average price of 1.22. However, as we know, our average is now 1.14, so it's lower than this, but this is the average for the year. So it's been steadily increasing. And now with us closing out the year at 1.114, we're actually sitting at a price that's closer to the average of 2021. So that's just something to keep in mind as we're looking at pricing, as well as when you're thinking about potentially making an offer on a property, or you're thinking about listing a property. We really do need to take a look at where we're at in the marketplace today and, take a look aside from whatever happened at the peak of the market. So moving on from the average benchmark price, let's break this down into detached, attached, and condos for Metro Vancouver. And then we're going to break this down even further and take a look at what's happening on Vancouver West and Vancouver East. So sales for detached homes in Metro Vancouver totaled 371. That was down 24% month over month and down 53% year over year. It's kind of the same tune. The benchmark price for a detached home in Greater Vancouver is 1.8, down from a peak of 2.1. So the benchmark is down 1.8% month over month, down 5.1% year over year, and from the peak down 14.7%, with total months of inventory sitting at 7.4. So while the overall market sits at about 5.7, balanced heading over to a buyer's market, our detached market is sitting at about 7.4 months, which is considered a buyer's market. If we look at the attached segment, which is focused on the townhouse market, we had 222 sales, down 18% month over month, and down 54% year over year in terms of the amount of sales. The benchmark price for a townhouse is $1,012,000. This is down from the peak of 1.150. Benchmark is down just 0.2% month over month, 1.5% year over year, and almost 12% from the peak, with a total of 4.1 months of inventory. So more of coming out of a seller's into a more balanced market. However, we do need to look into the market specifically, and I would argue that a lot of these numbers are moving towards buyer's market territory in locations where you have a higher price point because financing and affordability factors. Attached condos, we did 702 sales in December. That's down 16% month over month, 52% year over year for the December sales. And the benchmark price is sitting at $713,000, down from $844,000 from the peak. So the benchmark price for a condo is down 0.9% month over month, 0.9% year over year, and 15.5% from the peak, with 4.1 months of inventory. So again, just coming out of sellers into a balanced market territory. So let's take a look at Vancouver West. Sales, 39 sales in the month of December, down 25% from the month before and almost 50% year over year. Benchmark price, $3,073,000, down from 3.643, so about $300,000 difference. So the benchmark price is down 1.7% month over month, 8.2% year over year, and down 15, almost 16% from the peak, with 11.4 months of inventory. Townhomes, we had 13 sales in the month of December. That's down 41% month over month, 75% year over year. The benchmark price for a townhouse on the west side is 1.345. The benchmark peak was 1.548. So we're down 5.8% month over month, down 7.7% year over year, and down 13% from the peak, with 11.5 months of inventory in the townhouse market. Attached condos are sitting at 190 sales in the month of December. That's down 16% from November and down 45% from the year before in the month of December, with a benchmark price of $811,000, down from $904,000 in the peak. So the benchmark price is down 0.64% month over month, 0.5% year over year, and down 10.24% from the peak, with 5.3 months of inventory. So balanced market, probably trending towards a buyer's market. How does Vancouver East compare to Vancouver West? Well, we did 39 sales in the month of December, down 22% the month before, down 59% from the year before, with a benchmark price of 1.677, coming off from the peak of 1.956. The benchmark price is down 2.3% month over month, 5% year over year, and down 14% from the peak, with 7.9 months of inventory. So in buyer's market territory, but nowhere near the 11 months that is being experienced on the west side. Townhomes, 13 sales in December, sales down 13% month over month, down 66% year over year. Townhouse benchmark price is $1,040,000, down from 1.182, almost $1.2 million. And the benchmark is down 1% month over month, 3.7% year over year, and 12% from the peak earlier this year, with 5.6 months of inventory. So sitting on the higher side of balance, going towards a buyer's market, which tends to be the trend. And in condos, we did 56 sales, month over month sales down 22%, 61% year over year, and a benchmark of $676,000, coming off from $729,000 in the peak. So your benchmark price is down 0.8% month over month, even Steven for the benchmark year over year, and down 7% from the peak, with 4.8 months of inventory. So head in that balanced market territory as well. So if you want to look at them in comparison here, as you can see, the lower price points tend to have lower months of inventory, also haven't taken as much of a decrease in terms of price depreciation, but it seems to be somewhat similar across the board, just generally speaking, Vancouver West and Vancouver East. Obviously, we have to look at newer properties versus older properties, etc. That's always going to make a difference. I'm Christine Kopr with Sotheby's Realty in Vancouver, BC. I hope you enjoyed this recap of December sales, all of 2022, and what's going on in the marketplace. Please join me for more videos like this each month, as well as additional content and information I produce for my clients. If this is not in your inbox in an email today, sign up for my newsletter so you can get information just like this, in addition to special market reports, etc. You can sign up on my website or on my link tree, and probably in the comment below. With that, I wish you a great day and I look forward to being in touch.